Dominic Schnider, Global Head of Commodities Research for UBS Wealth Management. He joins us from Singapore. And Dom, first off, let me get your reaction in the oil markets. Do you think we should be seeing bigger reaction from what's happening in Libya?
Well, absolutely. If you really look over, let's say, the next 3 to 6 months, if this is really true that Gaddafi is nearing its end, then probably you're going to see here the spread that we have seen on Brent versus WTI to shrink below $20 a barrel. And that's probably mean that Brent prices will drop towards $100 and below. So in the current environment, given what we see here, and also the fact that the global economy is likely to slow pretty heavily, I would say stay away, look for lower prices.
Look for lower prices. Let me ask you this. Is there a better trade in either Brent or West Texas differentiation between the two right now?
Well, as I said, it was quite difficult to really judge how long this spread can last over a long term because there's really no physical arbitrage possible. But I would say now with the outlook that Libyan supply will come back, I think that spread definitely going to narrow over the next 12 months. We did some analysis to really see Libyan crude oil production to come fully back, as we have seen before the crisis. It's going to take us 2 years, but I would say even in the next 12 months, if things resolve quite quickly, you're going to see here additional supply coming to the market into Europe, and that's why you're going to see lower the spread coming down.
Now, you've lowered your 1 to 3 month trading range, I guess, for oil, $68 to $96 a barrel. Have you changed your views in light of what's happening in Libya?
No, that was actually one of the reasons was to really bring down the this is for WTI was because the economy is likely to really see a really big soft patch, and that's why we're saying demand growth is not going to be 2% in the second half of this year, probably below 1% or even zero growth in demand. That was one of the reasons. But I could imagine if you take that number and you add another $15 to $20, you get the numbers for Brent. So do look for prices falling deep below $100.
Wow, $68 a barrel. That would be pretty striking, I guess, as a bottom for oil prices. Now, let's talk about gold, because obviously gold doing really well in these volatile environments as a safe haven play. But would you have thought $18.70 an ounce? I mean, how much higher can we go from here?
Well, I think we do have even more potential to go higher. We increased our forecast actually last Friday. We're now looking at $2,200 an ounce, and that's basic to give our clients an idea that the sovereign debt crisis, we are at the beginning of solving it. We're definitely not at the end. There are so many challenges ahead, so that's why we were saying people will be afraid of the dollar, will be afraid of the euro, and some of that money will find its way into gold. We're going to see probably close to 2,000 tons of investment demand, and if this really materializes, I think we're in a good shape to see prices surpassing the $2,000 an ounce.
Okay, wow. Well, now, as you talked about the bullishness in gold, let me ask you about silver futures. I mean, noticing this spike upwards today in silver prices up 3%. Do you know what's behind these gains?
Well, for me, a little bit, I'm personally also a little bit surprised that silver is trading so strongly. You can say, well, it is like a beta version of gold, but I think overall the market is simply looking for alternatives. So a lot of speculation probably in there. I will be rather cautious. At best, we're going to see here prices going sideways. So for me, it's really like speculation and not really like a good fundamental long-term story.
Okay, Dominic, of course, at Jackson Hole taking place this Friday. You know, people are expecting possibly QE3 50-50 in a lot of traders' views. But how are you trading, but I guess advise people to trade ahead of this reaction or this announcement?
Well, in the short term, I think market will remain pretty volatile and probably to the downside. So I really would take away a risk wherever I can. You might enter a position the day ahead, because I think what market's going to do over the next coming days is really take off risk from the table, and that's going to see lower prices. So remain very defensive. Look for lower equity prices probably as well. So stay away from risky assets.
Okay. Dom, thank you for that. Have a good week. Dominic Schnider, UBS Wealth Management,
Thank you.
Global Head of Commodity Research.